Hi everyone, today I'm going to briefly explain how you can short the stock market or short a stock without blowing up your account. This probably won't be part of my live trading series since I'm gearing this more towards beginners, and it won't be part of my $25,000 options trading challenge because one of the rules I put there is I can only sell options, but this involves buying an option. I'll briefly explain why I'm thinking of doing this and why I want to do it in front of you if you're interested. Looking at the S&P 500 chart, this is the daily candle chart. We have been going up since October 26th. I believe it's been nonstop green, little reds in here, but it's like it hasn't gone up this much since I don't know, maybe since it recovered from the COVID drop, but we're at SPY 500. SPY is considered the market. If you're judging your returns or if you're judging any investment, you have to think of it in terms of the actual market. Did you do better than the market? So here's what I would do. I would just type in SPY stock, check out the last year. If you started investing just 1 year ago, if you didn't beat 21%, which you probably didn't, and I didn't either, you probably should have just been better off investing in the S&P 500. Just invest in this ETF and stop picking and choosing stocks. So now we're at all-time highs. I don't think we should be here. What am I going to do? I'm going to try shorting it with a little bit of money without blowing up my account. Now, so I have a little bit of an agenda here because I talk too much. I'm going to be buying a put. Now, in Canada, there are certain accounts like TFSA or RSP where they limit what you could do with options. You have to enable it, but buying a call and buying a put is considered a level 1 option. You are allowed to do this and you won't get flagged for day trading unless you're trading it every day. But I'm going to do this for 4 or 5 months and I'll show you why. When you short a stock, let's say you go -1, SPY's at 500. If I think it'll go to 0, if I want to short it, I'm basically negative 500. When people say its max loss is unlimited, just take a look at this chart. SPY's at 500. If it goes to 1,000, I technically just lost that differential, that 500. If it goes to 10,000, I just lost 9,500. If it goes to 1,000,000, I just lost 999,000. It won't go there, but it's just an example of how your potential loss is unlimited because it could go up forever. Now, what I want to do, short a stock without blowing up my account, without having this max loss unlimited, is buying a put. Your max loss is limited to what you paid for the option, and I'll show you why. Your max profit is basically when the stock would go to 0, which probably wouldn't happen, but you have, let's say, unlimited max profit. I know it's a bad way of explaining it, but I'm just trying to show it for beginners. Sorry, that's my work computer. Right now is lunch and I have 15 minutes before I have to go into a meeting. So what I'm going to do, I'm going to buy a put. Buying a put means I can force someone to sell me shares, 100 shares at a certain price by a certain date. I'm not going to focus on having $50,000 and buying the stock. I'm only focusing on buying the option itself. If we look at the options chart, so sorry, just for beginners, you could just type in the stock you want. So type in SPY here. You can choose the stock, which I did, or you can go into options. This is the options chain. Now, make sure you have the calls and puts. Make sure you're selecting the right one. I'm going to be doing a put because I think it'll be going down. If you buy a call, you think the stock is going to be going up. So what I'm going to do, I'm not going to choose the February 12th. I want to give myself enough time to be correct. And I'll show you some of the risks involved with doing this. You need to be correct. When buying a stock, you need to be correct in direction and magnitude. That means I need it to go down, but I need to go down by enough that I make money. And I'll kind of explain here. So I'm going to give myself 3 or 4 months. What is this? This is 4 months. So June 21st, 2024. I need to be correct by this date. Now, the price I want to choose is 500 because I never thought SPY would hit 500. I always thought it would be a joke. Considering just a year ago, we were at 360. I never thought SPY would be up 80% in just a year. Now, take a look. The price here says 11. This means $11, but it's $11 per share. I don't know why options do this, but we have to multiply everything by 100. This is $1,100 because it's $11 per share and every contract is 100 shares, which is dumb. Let me clear everything. So you go 1154 times 100, 1,154. So if I wanted to exercise this, that means, so an option gives you the right, but not the obligation to buy 100 shares off someone. So I would need 500 per share times 100. I need $50,000, but I'm not focusing on this at all. I'm only focusing on the option itself. Now, I just want to briefly explain. I need to be right. So right now we picked a direction. I think it'll go down. I think it'll be under 500. Now, if you're wondering, how would I make money? How much under 500 does it need to be? It's pretty easy to figure out. The answer is right here. I need it to be at least $11.54 under 500. Sorry, I'm trying to remain in frame. I'm noticing myself dropping out of frame. Okay. So what we need to do, let me clear everything. I'm buying at 500. My break even is the strike minus what I paid. I need SPY to be at least 488 by June 21st for me to break even. If SPY is 470, 460, 450, anytime between now and then, I can close this, I can sell this and still make money. If SPY goes up, I'll be losing money. But again, my max loss is still what I paid for the option. It'll be this $1,100. So I'm not too worried if it goes up in the short term, which it might. I just need it to go down by June 21st. So what I'm going to, is there anything else I need to explain? I think that was it. So we're doing, explain what a put is. I told you the risks. So my risk is just the $1,100 that I'll be putting in. Oh, you know what? Let me see. Right now, this is $1,100, but take a look. I'm choosing 500, but if you look at 490 is 860. So that's $800. So why wouldn't I do that? That's a little cheaper. But take a look at this. So at 500, my break even is 488, but I'm paying $1,100, so I could lose that. But at 490, my break even is 481. So here's the thing. Buying further out is cheaper, $300 cheaper, but I need SPY to go down to 481 by then. So it's a little riskier. SPY might not go down by this much, but then again, I'm not losing as much. So the more risk you take, risk meaning the $1,100, the more chance you are to make money, because SPY only needs to be 488 versus 481. Now we could go even safer, I guess. Let's see what 480 brings. 480 is only $658. So 480 minus 658. So my break even is 473. Chances are SPY won't be 473. So less risk since I'm only losing $600, but less chance of being profitable as well. And if you're wondering what your chance of being profitable is, it is considered the delta. So if you look at here, the delta, you have to multiply this by 100 as well. So let's look at 480. 23% chance of success. We go to 490, 30% chance of success. We go to 500, 38% chance of success. So chances are I won't be making money on this, but I have an intrinsic feeling. Is that the right word? Intrinsic feeling that SPY will go down. We shouldn't be this high. Let me try my luck shorting the market without blowing up my account. So I have it queued up here. June 21st, one option. Let's do two options. At $1,100 per option. Take a look at this. Buy to open, 2 SPY puts. This is in my tax-free savings account. It is $2,200. I need SPY to be 488 by that time to break even. Let's see what happens. So it'll get filled right away, and I'll just show you what it looks like. So here's my option. SPY, the 500 put. Did I get it right on the delta? Wait, did I read it wrong? Why does this say 76? And I was reading it the other way. But that's fine. And now we wait. So slowly, over time, this will lose value. That's considered theta. I don't think this video is, I don't think I should explain that in this video. It might be a little too much just for a beginner video, but I don't recommend shorting the market by selling naked calls or even just going -1 on the S&P 500, just because you have potential max loss. Learn about options. It is a little easier. It is a little better. in terms of managing your risk, I'll probably do follow-up videos on this, maybe once a month, because I do have 4 months until that date. Here's what I'll do. Every month or so, I might double down if SPY continues to go up. If SPY goes to 510, 520, 530, it is too bubbly. Like, it's too high. I just don't think it'll continue doing this. I might double down and continue buying more. You know, one thing I haven't answered. When do I take profit? That's a hard question. If SPY is at 488 next week, if it goes down 2-3%, would I be happy with that? Yes. Would I take profit? Let's see how much my option is worth, and then we'll make the decision at that time. I haven't considered an option, a profit taking scenario. When I'm selling options, I usually do 75%. But let's see what happens here. Is a $2,200 risk. I could lose all of it. That's my max risk, max loss. I'm okay with losing it, but I have a feeling I'll be right on this one. I'll make money. Let me know if you have any questions. I know this wasn't very technical. I'm not sitting down with like detailed charts and doing proper analysis. It's just me trading during my lunch break at work. Thanks for watching, and tune into the next one.